The main macroeconomic news of the week will come on Thursday the 13th of September, when the Bank of England and the European Central Bank will announce their latest monetary policy decisions. In August, the Bank of England voted 9-0 to increase interest rates by a quarter point to 0.75%, and also to leave its quantitative easing bond buying programme unchanged at $435 billion. The ECB also left its headline borrowing charge unchanged at its last meeting. In its case, that's zero, where interest rates in Europe have been anchored since February 2016. Neither monetary authority is expected to tighten policy this month, unlike the US Federal Reserve, which is seen as a near certainty to increase the Fed funds rate by a 0.25% to 2.25% on the 26th of September. We can see here how policy is just starting to diverge between those big three central banks, and what you need to watch here is how the vote falls at the Bank of England and any indication from Governor Mark Carney on when the next rise might be. His dovish speech in August led the market to think that it's a matter of one and done for 2018 with no more increases this year. We shall see. Also look for any comment from the ECB that confirms it will stop adding to its quantitative easing scheme in December. President Mario Draghi has already hinted that rates will stay at zero for a good while yet, even after that. Company-wise, it's going to be relatively quiet, with just 4 FTSE 100 firms scheduled to release a trading update or results, although a number of mid and small cap firms will also be publishing their numbers. They include Primark and British sugar owner Associated British Foods on Monday the 10th of September, equipment rental giant Ashtead, retailers Superdry and JD Sports on the 11th, 2 more retailers Dunelm and Sports Direct on the 12th, GVC on the 13th, when we'll get to see how the Ladbrokes Coral acquisition is bedding down, and finally Pubs Group JD Wetherspoon on Friday the 14th of September, where the statements are always worth a read, if only for Chairman Tim Martin's comments on Brexit. But for me, the name really capable of causing a fuss next week is grocery giant Morrison, which will publish first half numbers on Thursday the 13th of September. As we can see here, the shares are having a good year. A strong run over the summer leaves Morrison trading at their highest level since December 2013. Now, this is partly due to gathering optimism regarding the wholesale joint venture with McColl's, hopes that the Sainsbury-Asda merger makes some of the heat out of competition in the grocery market, an absence of any real activity from Amazon after its $13.7 billion acquisition of Whole Foods in 2017. Apart from those 3 factors, investors have also warmed to the efforts of Chief Executive David Potts and his team to make Morrisons more competitive in the face of the ongoing onslaught from discount and online rivals. The improvement can be seen in how like-for-like sales have increased year on year for 10 straight quarters, also in how profits have started to recover, and also in how debt has started to come down. So, the big 4 numbers to watch from the interims are like-for-like sales growth in the second quarter of the year. Q1 came in at 3.6% growth, the best number for several years, and a further step up on even the recent improvement, as we can see here. Secondly, look at pre-tax profit. For the full year, analysts are looking for an 11% increase in underlying pre-tax income, so that looks a reasonable benchmark for the first half, where Morrison made £177 million a year ago. Then look at the dividend. Morrison's even put out a 4p per share special last year, so watch out for any hints there. But for the moment, analysts are looking for a 14% increase in the ordinary distribution. That also seems a fair benchmark for the first half, when Morrison paid 1.66 pence a share a year ago. And the final key number to watch is debt. This has already gone below management's £1 billion target, and boss David Potts is targeting a further reduction for this year. Strategically, keep an eye out for comments on the launch of a second online distribution centre with Ocado in recent weeks, and any benefits from that, and also details of the rollout of the wholesale venture with McColl's. The original goal was to open 25 sites and get sales to an annual run rate of £700 million, but some analysts think those numbers could be beaten, so we'll see. Thank you for watching, and I look forward to seeing you next time.